Hello, everybody. This is Mr. Loo. Over the last few days, there are two big good news that have just been released, and I think many people have underestimated the degree of importance of these two big news. Okay, I will actually let you know what these two big news is that were likely to determine the fate of our stock market over the next 6 months to a year. So let's watch on, shall we? So as usual, these are my usual disclaimers. Please read on. Not advice for you to buy or sell. So let's start. The one news that was being released that is somehow not being focused on by the stock market, and I think it's very important for everybody to look at it, is the inflation rate across the world, starting from the United Kingdom. So the UK inflation rate has just been released and it went down from a 3.2% to a 2.3%. Did you see how big the drop was? There's a 0.9% drop, That's amazing because right now, UK is now very close to the 2% inflation target. Okay, given right now it's at 2.3%. And that's a real achievement that everybody has been looking at in UK. Of course, the economists were nitpicking and say that, hey, I was hoping it dropped to 2.1% or so, okay? But you achieve 2.3%. Nah, no good, right? But 2.3% is really a phenomenal drop already. So the question is, if UK inflation rate has dropped phenomenally, what will happen to US inflation rate, right? Will it be the case where UK inflation rate drop a lot and US inflation rate increase a lot, or even say stagnant, right? The world is now an interconnected world. Well, the truth of the matter is that we think that there is some interconnect linkages. Now, of course, when you dive deep into the UK inflation rate, you also look at there's some inflation rate that are still fairly stubborn, especially the service inflation rate. And that seems to be the same problem at US. But if you look at the high level, big picture, I think the UK inflation rate has fallen significantly. So as I was saying, with the inflation rate in UK now falling, what about the rest of the world? Well, I pull up all the inflation rates that is quite important to have a dipstick, a pulse of where the inflation rate heading down. So France have fallen significantly down to 2.2%. Italy is right now 0.8%. Germany is now 2.2%. Switzerland, for some strange reason, have a spike, but it's now at 1.4%. Canada is at 2.7%. Singapore is also at 2.7%. So can you see that global inflation rate as a direction is coming down and coming down fairly rapidly? So it cannot be that everybody's inflation rate is coming down, where the US inflation rate, gets stuck up there or even go up, right? So I would take the position that, all these are indicators that, inflation rate is likely to be falling and falling significantly. Now, however, the most important inflation rate of all is not what's happening in Singapore, Malaysia, okay, or Korea or Japan or even the UK. The most significant inflation rate is that of US, because every central banks need to take the cue from the Federal Reserve. Because if they cut the interest rate, then the rest of banks can cut interest rate. Now, if the Federal Reserve refuse to cut the interest rate and the rest of the central bank cut the interest rate, what will happen? Their currency will get a hit because many of the domestic funds will start flowing to the US. This is what we call hot money, right? And as a result, they will sell the domestic currency and buy US dollars. This would actually depreciate the currency, which would then cause imported inflation again. So everybody takes the cue really from the US Federal Reserve. So the US Federal Reserve right now is looking at their inflation rate. They are targeting a 2% inflation rate. Right now, the headline inflation is still stuck at somewhere around 3.4%. The question is, will it come down? I think that coming down is a matter of time, and I think it will be very soon. So there are two scenarios right now that we can think of. The scenario one is the US inflation rate were to persist. And the scenario two is the US inflation rate falls. It's very unlikely that US inflation rate will start to have a reinflation in a big way. Okay, they may have some spurious ups and downs, but that kind of stagnant inflation rate with some volatility is scenario number one. The scenario number two is actually a fall. So let's take a look at what happened in these two scenarios, shall we? If the US inflation rate were to persist, okay, and the rest of the world is unlikely to lower interest rate. But the pressure to do so for the rest of the world will be very, very high because there's very high political and economic costs. Many countries are now suffering from very high interest rates. They just can't wait to lower interest rate. There's a very, very strong urge for the Bank of England and the ECB, the Europe's central bank, to actually lower the interest rate. There might be a case where a few might break ranks, even if the US refuse to lower the interest rate. Some of these central banks might break ranks and lower the interest rate so as to fight some of the pressure on the social economic cost side. If that's the case, then their own stock market will have some bull runs and the bond markets will have some bull run as well, but their currency will depreciate. So this become a very messy situation. I'm thinking that this situation is very unlikely, but certainly the urge to do so is very high. The scenario 2 is that if the US inflation rate were to fall, and we have already seen the rest of the world are falling, then the US Federal Reserve will most likely lower their interest rate as soon as they can. And guess what? This will cause a huge bond market rally across the world and also stock market rally across the world. I'm taking the position that a cooling inflation rate will come to the US soon because of what I see in the rest of the world, which I've given you the evidence. Inflation is really a global phenomenon, and it's very unlikely that when we saw a global inflation, okay, that is caused by all the printing of money starting from US, it cannot be that right now the rest of the world is experiencing a cooling of inflation and the US doesn't happen. Very, very unlikely, okay, very, very unlikely. So I'm taking the position and the bet that inflation will be cooling soon. So I'm taking a position and a belief that the stock market will continue its bull run and the US Treasury market will soon have a bull run. Now, to eat my own dog food, I've actually fired so far for this month 2 shorts, sizable shorts in the US Treasury bonds market. And I think I'll continue to fire more shorts in this coming month as well. A lot of you have been asking, so Mr. Loo, what bonds are you buying? Can't you just tell me and just follow you? Well, I've said again and again, I say it faster in my Telegram channel because that's where I can inform the world real time and less slower in the YouTube channel. So you should always follow my Telegram channel. The US Treasury bond ETF that I buy is a rather sophisticated one and carry a lot of risk. I can stomach those risks, but I bet most of y'all would just go in blindly and follow Mr. Loo and get burned. So I would take a more conservative position to take a look at TLT, which is somewhat safer. It's a 20-year Treasury bond ETF. Okay, I don't have a single position in this one, but this is a good ETF that I've seen many people buy. I'm not telling you to buy. I'm telling you it's a popular ETF. So the TLT has crashed by roughly about 50% since the start of the interest rate hike. And with the belief that inflation rate will start to cool down phenomenally and the interest rate will start to cut as well, there's no reason not to believe that the US Treasury will start to rise as well. So what has caused the fall, the reverse must be the correct as well, will cause it to rise as well. So I'm taking a bullish position that I think this will happen, okay? I'm not telling you what to do. I'm telling you what I've taken a position, right? Fire shots into a US Treasury market. So really, it's not a question of will or will not the interest rate be cut. I think it's a matter of when, right? Some people say it's very unlikely with June. I think I've analyzed this and believe that at least 1 to 2 rate cuts by Federal Reserve is most likely to take place this year, okay? I've taken a position. Even if it doesn't, next year will happen, okay? Next year will happen. And when that day do happen, then the bonds market will likely to have a rally. So I'm prepared to take a wait for that. Now, a lot of you like to take the position that I'll wait until the last minute, okay? Then I buy it, right? So, if you are sharp and tuned enough, go ahead, right? But I'm taking a position that right now is probably around the time. So this is what I believe. You don't need to choose to believe the same thing, okay? So if this is your same belief as well, please let me know. If you don't believe, also let me know in the comment section. I'm happy to hear. So this is the part 1 of my video. And tomorrow I'll share with you the part 2 of my analysis, shall we? Okay, thank you, and I'll see you tomorrow.